The aftermath of interest rate cap in October 2016 has seen a squeeze in credit as banks focus on loaning low-risk customers. Subsequently, this led to a spike in short-term lending through mobile handsets where 20 digital creditors are now in operation in Kenya.
Even before the interest caps, there was a segment of the market that the banks were not serving efficiently. Most banks, you require collateral in order to get a loan, even when the interest rates were not capped. Without collateral, you're not able to get a loan from the banks. But with fintechs, most of them, like Okolea, we do not ask for security. We don't ask for collateral.
Moraya says the increase in fintechs is enhancing financial inclusion in the country with short-term unsecured lending.
We try to determine their willingness to service loans, and we try to determine their capability or capacity to service certain amount in terms of loan size. So we try to look at their M-Pesa statements. We look at their CRB records to understand how they are servicing other loans from other financial institutions, and we are able to use that data to come up with a fast loan limit and how much they are going to increase as they service their loan on time. For us, we increase the limits of every customer every single time they repay their loan on time.
Okolea International, which began operations in 2016, has grown its customer base to 135,000 and has so far processed over 200,000 loans. The firm is now targeting small and medium enterprises in which it is recruiting at least 1,000 traders monthly.
For you to access our products, you have to go to Google Play and download our app, Okolea, and then you register, you are assessed, and you're able to borrow from us. Currently, we are working on a USSD code for people who don't have smartphones so that they'll be able to use the USSD code to be able to access loans from Okolea. That should, the next 1 or 2 months, that should also be out there in the market. Remember, Ronald, we are serving a lot of traders. A lot of traders in Gikomba, a lot of traders in Nairobi, a lot of traders in Kiambu, and other counties who don't have smartphones.
According to Moraya, fintechs are proving a game changer in the mobile money space.
I believe fintechs will be able to bridge that gap. They'll come up with products that are affordable, that are more disruptive, and they'll be able to share that cake among all the players. And I believe when that happens, we'll see the market dominance of the bigger players starting to reduce.
Similarly, the firm is targeting at least 2 million client base by end of next year as it scouts for investors to inject fresh capital for expansion and to effectively compete with well-capitalized players in the market.
Well, right now, our lowest interest is 5%. Those are for guys who are borrowing between maybe 1 or 2 days. We have 10% for somebody who's going to borrow for 1 week. We have 14% for 2 and 3 weeks. And we have our highest interest at 20% for a month. We have already made a decision to lower our highest interest from the 20% to 15%.
Ronald Willie, Business Insight.